Markets are trading with turbulence. Futures and the volatility index are sure to jump to extreme highs amid the presidential race in the US. Wall Street has come under heavy pressure. On the one hand, investors are pricing in risks related to the election uncertainty. On the other hand, the coronavirus resurgence affects the market sentiment. Today, the US dollar rebounded following a two-day fall. The futures market responded to the televised debate with gains which were followed by a 0.95% drop. Today, the U.S. equity market is extending losses. The U.S. benchmark stock indices opened the New York trade with almost a 0.6% decline. The Dow Jones is trading 0.7% lower. Joe Biden, the Democratic challenger, is gaining more popularity than Donald Trump. Nevertheless, investors do not make hasty conclusions. Hillary Clinton used to defeat Donald Trump 3 times in the debates. However, this did not ensure her victory in the presidential election. Meanwhile, traders are also watching for progress in talks about further fiscal stimulus to soften the coronavirus blow. Market sentiment will greatly depend on whether Congress will be able to settle the bill this week. Starting from next Monday, the lawmakers will go on vacation until the presidential election. If they fail to pass the bill, investors will be braced for market turbulence amid fears about the new coronavirus wave. Today, the ADP payroll processor released data on employment in the U.S. non-agricultural sector. The number of jobs in the private sector increased by 749,000 in September, more than the expected 650,000. The survey will shed light on the official non-farm payrolls, which are due this Friday. The US dollar index is struggling for gains today. It has climbed over 94 points. In the second half of September, the index nearly reached the resistance level at 95.06, but it retraced later. The greenback could resume growth. However, it's unlikely to approach the levels of the spring of 2020. The most plausible scenario is that the US dollar will reverse downwards, with its index falling back to support of 92.58. Investors are pricing political and economic risks. The U.S. economy will hardly recover in the short term, as expected, so the crisis is set to last for long. The Canadian dollar is trading almost flat with a downtick. If the dollar versus the loonie pair moves lower, the price could decline as low as 1.3290 and further to 1.3250. Alternatively, analysts do not rule out a climb of the pair. The loonie could weaken to 1.3450 against the US dollar and approach the level of 1.35. You've watched daily financial news on InstaTV with me, Anna Kasatkina. We'll see you back tomorrow. Bye.